All right. Good morning, everybody. How is everybody doing on this fantastic Tuesday morning? So we're going to take a look at Bitcoin and a few other FX setups this morning. There's quite a few, actually. And one thing that everybody has to keep in their minds for the rest of the week is we have a lot of event risk on tap. We do have FOMC tomorrow at 2 p.m. Eastern Standard Time. And then Friday, we will have non-farm payrolls. So a lot's going to happen this week, more than likely, with price action. Right now, I just got the hourly pulled up just so that way you can see that this monthly support level is just basically keeping price glued right to it. Intraday price action. Yesterday, we had a little bit of a downside move, nothing major. And I think it's basically an inside day. And then from the open yesterday of the new daily range has just been sideways, probably because that event risk is on schedule and it's supposed to be here tomorrow. We do have the RBA tonight, but I don't see that really affecting Bitcoin as much. But you never know, right? So first things first, daily divergence on the chart. Little bit. We've been kind of waiting on this to happen. We have basically had it going on right through here a little bit, and it was at support, to be fair. But you did finally get that breakdown. You are testing the very, very bottom edge of that trend line support. On the line chart, we already know that Bitcoin has broken down and closed several dailies underneath the overall channel range. But this is the wick lows. So that is basically the complete and total bottom end. you are at support and you are printing bullish divergence. So what we were looking at yesterday inside the Discord was we were watching this right here. We didn't get an exact test. It was very, very close, and then price just kind of rolled over. And like I said, put in, it might have been a new low a day, but you can see that it wasn't a very big range day yesterday at all. And then now you can see the range that you have on the chart, which is a very, very tiny daily range. Just basically printing a doji right there on monthly support. We did get to close below monthly support on the spot market. So technically we are looking to sell any rip. Now we are expecting a rip to come probably pretty soon. And I do believe it is going to blast right through this level right here with the big news event that we have all week. I mean, you got two massive news events that can basically make this thing spike huge with like something like this. But if we do get that, we will be looking to sell into the rip. So we'll see where it stops, see if it stops at some kind of resistance or something, but we'll keep our eyes on it. For right now, we're just going to let it stand by. If you are looking, 4 hour has got lots of divergence on it. I mean, tons of divergence on the 4 hour. If you are looking for a bullish pop, right now you can see the 4 hour chart has put in support right here on the monthly support level. So, I mean, technically, as long as you're not closing a 4 hour below this level, you could potentially look for a pop. And we know the 4 hour candle closure comes in 2.5 hours on this asset. So if you do get that 4 hour closure below the level, watch for the next 4 hour candle to be a bullish impulse, as that first closure could absolutely be a bear trap. But with this divergence going on, with the fact that you do have on a smaller term time frame, one could call this a 3-drive bottoming formation, because you have a low here, then you have another insignificant low right here, and then obviously the last third and final insignificant low. Now, these 3-drive topping formations or 3-drive bottoming formations do not always play out, and sometimes they can be difficult to try and time. But right now, we have an obvious setup staring us right in the face. I mean, so that's what we're going to do for today. We're probably going to be bullish on Bitcoin just for today. I do not trust selling this close to that monthly support level. And not only that, with that trend line down there, we probably could see a little bit of a pop. I think Glassnode did fix their problem. Let's go look and see if we got any more or any accumulation. I shouldn't say any more. We should see if there's any accumulation happening, and there's not. So even though we're putting in lower lows, lower highs on the 4 hour chart, you can see that there is still no accumulation happening on exchange. Now, this is all exchanges, okay? Because Glassnode tracks all exchanges, and there are buyers probably here, but you're just not going to see them. They're not buying on exchange. So, I mean, that could be, that could be a sell signal, and it's by itself. But you know where to watch, right? You know where to watch. Let's go back to the daily time frame. There is your supply zone right there, 39,251.02. That is on the daily. So if you want to take this thing short this close to that massive support zone, then right there's the first place I would be looking. Second place would be there. But just keep in mind that if the market likes what they hear from Jerome Powell tomorrow at 2 p.m. Eastern Standard Time, a daily candle up to $42,000 is possible. I'm talking, this thing has been not doing much of anything as of late. If we go over here to the weekly time frame, let's stretch this out. Let's go ahead and get rid of everything so we can see what's going on. The last 3 weeks, you have done really not much of anything. This week right here was a test of monthly supply. That's why you got the rejection. But you can see that the lows are insignificant. We want to see stuff like this for continuation. Expanding candles, breaking down through supports. Monthly support there. You got tons of weekly support here. Like I said, trend line support. It's just support. So That's why it's having so much difficulty breaking down. And also maybe the last 2 weeks there really hasn't been any action because people are just waiting to see if it's going to be a 50 basis point hike or a 25 basis point hike tomorrow, right? So we'll see what happens. Make sure you guys mind your downside risk. Environments like this can be very, very tricky, very difficult to trade. So if you just want to set it out, go ahead. Got multiple different hourly levels to watch if you are looking for that buying opportunity. All right. But I do believe you're probably looking for the upside. We didn't get a big bullish move from this green level here, but you did get a bullish pop nonetheless. And this is a higher low intraday. So obviously we're still longer term bearish, but we need a higher pop since we did test or get real close to testing that daily level. There is plenty of liquidity right there. So a stab above that is where we're going to be targeting. That's as high as I'm going to be targeting as well. Because once you take out the liquidity, anything can happen. So let's go over here and look at the SPX. This was our bearish target this week. You can see that we hit that yesterday. If I go out here to the daily time frame, it was just this swing low right there. I have this level drawn, or this little thing drawn up here because once again, you also have bullish div going on the SPX. There's a lot more divergence going on the SPX on the 4 hour. Swing low, swing low, swing low. That's that 3 drive bottoming formation. Swing low, swing low, swing low. So this is clearly bullish divergence going on here. We typically don't want to short into that. We might not have to play the bullish pop if you're just that bearish, but at the same time, when signals like this present themselves, you have to at least give them respect because there are a lot of people that do trade these signals. So right now, and since you took out this liquidity yesterday, that was the target. If you are still short the SPX or short SPY puts, if they're going to expire this week or even next week, you might want to go ahead and close that position simply because this bullish divergence that has been building over the last couple days. And since you just took out that massive area of liquidity, I would suggest or assume that you're probably going to see a bullish pop. All right. And that bullish pop, I don't know how high I don't know if it's going to happen. It just looks like that's probably what we're looking for. All right, so let's go over here to the FX world. Let me see, make sure I don't see nobody saying. Ben says, but the on-chain guy says we are at maximum at long-term holder rate. Full-on bull market to come. Yeah, I'm not going to say that they're wrong. You know what I mean? Because nobody truly knows. So it's not about being right or wrong. What I can tell you is the macro backdrop does not support a bull market right now. Now, does that mean Bitcoin will be bearish because of that? No. It can be down sideways to up. We can bounce from $55,000 to $35,000 for the next 2 years. Okay? I just do not see new all-time highs happening this year. We just resolved the range on the SPX. All right? Remember this big bullish rip your face off rally? Everybody thought that this was the bottom. Okay? We have now taken that out. So yes, I am expecting a bullish bounce, but that bounce I am expecting to get sold right back into $43,000, somewhere in that area. It could even go up as high as $43.91, but I am expecting those sellers to come right back. This monthly candle on the SPX is one of the biggest declining monthly candles that you've ever seen on this asset. That is range. That's range resolve. It is no longer in the range. You have broken down. This pop can go as high as 43.72, and that's where I would expect sellers to step right back in on this asset to roll over. All right? So that's what I'm saying. And with these two big news events coming, you could get that big of a pop. Now, if you look over here on the daily, it doesn't look like that's that high, but it is this swing low, right? It's that swing low. That's why I said you could see it get all the way up to there before you see any more downside. But that's the line in the sand for the SPX if you're looking to be bearish on the SPY. Because I know a lot of people trade the SPY because SPY puts are cheaper. Let's go ahead and get rid of all these old levels because they have played themselves out. Let's go over here to the monthly and then just stick this baby on right like that. That's the support. If you want to use the bullish candles open, you can. It doesn't really matter. That's the supply. That's the area of which a spike should start to slow or wane, if you will. All right. So Euro USD, damn it. I am still short Euro USD. I got short on this day right here. That short has played itself out. We are seeing it at support. Let's go over here. Right there. It's just another swing low. You're in between, weekly support, but you did purge that liquidity. So same scenario. See if you got any divergence going on. You do. Here's your daily time frame. Swing low, higher swing low on the indicator, much lower swing low on price. Being at this low end of the market, printing divergence on the daily. You probably got divergence on the 12, 8, and 4-hour charts. Probably going to see a bounce pretty soon. But we're not trading this. What we're going to be doing is we're going to be watching pound USD. Now, I'm looking at this for a potential short just for the day trade. One daily range. Let's see here. Daily support is going to be right there at 1.24915. So if you go back into the charts, you're going to see that this is your low of day. This wick. This is 1700 hours. This is when the new daily range starts. So that is your low of day. Am I going to target low of day if this short setup situates itself and plays out and it gives us an entry? No, we're going to be targeting daily support only. Do not, if you do take this short, we're not taking it anytime soon either. I'm going to wait till all the way up until 9 o'clock because as of late, the intraday signals or the entries have been happening later in the day, like almost at the end of where I even look to take trades. My day trading entries come from 7 to 10 a.m. on FX, and I do not trade after 10 because the signal has already happened or the entry. So we'll see if it, if it comes back up here. An hourly close above this candle's resistance is going to be a no-fly zone because this thing is extremely extended to the downside. All right? The only reason I'm looking for the downside to continue is because you got this nice big bullish pop. Let me get rid of this, and this. Or here, I'll use this for my benefit. We got a nice big bullish pop, and we took out this swing high. So that would have been the target for me. If I would have gotten long anywhere in here, I would have been targeting that. Once that is done, then you got this reaction. That's a pretty nice move lower. So I'm looking for this to find resistance and maybe come down. Maybe you get lucky and you get a push further on down into that swing low. But the target will be daily support if we do get an entry. That will be where I shed position. I just do not trust it falling below that support to take out the low of day. And since the low of day was a demand test, it's more than likely that your stops are going to be under this swing low and not the low of day, right? Because of that. That was the signal for anybody to get long here. As soon as this traded right back into demand, that would have been the signal to get long. You can see you did get that bullish reaction. This was through the Asian session. Here is your London session. So it is a risky trade, as in the London session could have set the low of day, or the Asian session could have set the low of day, and it's, you might get a higher push. But one thing is for certain, we do have an area to watch, and that is 1.25409. As long as we're not closing hourlies above that, we could be potentially looking for a downside expansion to 1.24915. So that's what we're going to look for. Something like this, push back up into this, and then roll over, and then that's our target right there. That's as low as I'm looking. Once again, I think since it's at the lows, I think there are better things to look at. But I do have it on watch. USD JPY, not really a signal. This thing, yeah, man, it's been cooking to the upside. Just a phenomenal run. The last bearish day you had was just it was inside of this day's range. So even though it's a bearish candle, it still closed as an inside range candle. So you're trading inside of an inside range. Big candle, smaller, smaller, smaller. And all three of these candles are trading inside of this one. Not really a setup there. The midpoint or support is there for now. So if you think it's going to continue to go higher, that would have been your entry. I do not like taking the entry here. In fact, you have closed a new lower hourly, so you could be looking for a support test of 129.983. I just have it on watch because I like watching insane price action. And then here is the last one, Aussie yen. Let's go back out to the daily. So big push lower, took out support. Then we got a bullish pop. Now that bullish pop has stalled right there. It is above the 50. But the other day we were looking for a long and it looked like this and it ended up being a short. So here is your 21 exponential moving average. It's coming in right in the middle of that daily range. So what we're going to do is we're going to lean to the sell side just till resistance. And that's going to be right there. Anything closing above 92,604 means that it's probably wanting to test daily resistance, and then we do not want to short it. This is a pretty decent sized bullish pop after this really big bearish move. So we'll see if this level holds right here. If it does, I think these are the only two entries for now that you would be looking at. I still would not take this entry this early in the morning either. Like I said, a lot of setups have been happening this week really late in the day. Let me show you the setup we were looking at last week at the end of the week. We went over this in the members only. All right, so we were watching this area right in here. I should have left that on there because now I'm not going to remember what it was. Boop, 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 boom. Yeah, I don't remember what it was. I think it was just daily res. I don't remember. Damn it. I know which candle we were looking. Yeah, it was daily res. All right. So here, if you look at the bottom of the screen down here, that's where your time is. So you can see 0600. That's 6 a.m. 7, 8, 9, 10 o'clock candle was the premier setup. And then boom. Now, I was looking for this to continue long because the RSI was above the 50 and price was trading and closed this day, this bullish day, the previous day, closed above the 21 exponential moving average. So I was watching hourly support here and here. Let's go ahead and move this down because we know the daily support's there. So I was basically just watching this. When we got this bullish pop right here, I was looking for long entries here. And it did give me a setup right there. But after an hour later, we did not get no move. But when I called the position out, or when I said I was looking at this, I said I'm looking for a long position. But if you are looking for a short entry, watch resistance at 85,054. And you can see that was the entry. That was the trade. So I myself was on the wrong side of the market on this day, going off of the RSI and the 21 exponential moving average, looking for bullish continuation. This was my target there, all right? I was looking for price to expand up there and take out that swing high. And as you can see, I was wrong. But the resistance call out or the short call out was phenomenal. It was beautiful. That was the best trade of the day across all assets, all right? That was a 92 pip move to the downside. Massive, massive move. So, yeah, we're going to look for that to continue. Now, if you look at New Zealand yen compared to Aussie yen, New Zealand yen is a lot weaker, right? Look at Aussie yen. You've gotten this bullish pop. This bullish move could be getting ready for the RBA. Now, I did, like I said earlier, 3 big major news headlines, the RBA. So if you want to leave this alone, I don't blame you. If you want to just not trade, for this entire week. I do not blame you. I do not blame you at all. Very, very, very dangerous conditions to trade in. Technical analysis is not really that great when you got massive news events guiding price. All right. Good morning, everybody. Good morning. Good mornings. Word on the streets is that your unit looks like a weapon. Okay. Morning. Good morning. Yeah, don't. Once again, Ben, those guys that only follow that stuff, I mean, they're Bitcoin maxis, right? They're Bitcoin maximalists. They're only always going to be bullish. They were bullish back in 2018 at $3,000. Remember, from 20,000 to 3,000, they were buying every dip, and they were wrong the entire time. So I don't know if we're going to see something like that. I mean, there is a potential move to get to 26K. I posted about it on over the weekend on Twitter. Am I looking for that? Kind of, but like if it doesn't play out, it's not going to be anything. I'm not going to be too worried about it, right? Because I know that the conditions we have currently, they support more of downside to sideways price action than it does bullish conditions. But it could be bullish, right? It could end up being bullish. Illiquid supply snake oil for sale. Yeah, pretty much. Big pump coming this week. Go buy Bitcoin, Ethereum, and SMX. Well, I think we already talked about that. So, yeah, we are looking for a slight pump. Not a big one, but a pump nonetheless. Can I check XRP? Yeah, I do not trade it because once it came off of the Coinbase exchange, I just left it alone. But we'll go look at it. Let's go look at it on Kraken. It doesn't look good on Kraken, but yeah, I mean it looks worse. It had a clear and obvious move lower against that dollar strength last week. Against that dollar strength last week. This is what I wanted to see Bitcoin do, but it didn't. We have to take that into consideration. So when a move that I'm expecting to happen doesn't, then I have to stand back and see like what am I missing here? So yeah, I mean, you took out support to the downside with a close, but this is gonna follow Bitcoin. If Bitcoin gets a big pop from here, this first little area of supply might not hold. Right? So you might just get a big, massive, gargantuous bullish candle like this. Just blast right through everything. But I would be looking to sell that as long as there is some resistance. Because I think you might get a big bullish pop off from FOMC and then maybe see that pop get sold into on NFP. Right? Because it's just 2 days later. So just be careful if you are going to trade. Would I buy this? Not really, because I don't like XRP, right? I've looked at the white papers. To me, it doesn't seem like it's anything that I want to be a partner in or an owner. So I don't own any of it. I do not trade it. I don't own it. But you can trade it, obviously, right? You can trade this thing. So if you want to trade it, I just don't see a signal on it right now. You don't even have bullish divergence. You have nothing here. Downside continuation, but like I said, if Bitcoin gets a big pop, this thing is going to follow because the main liquidity providers in Bitcoin are also the main liquidity providers in all of your alts. That's why they move so similar. So just be very careful. Yeah, of course. Yeah, I know you were sarcastic. All you got to do is subscribe to the Glassnode channel, the YouTube channel. I'm not for sure. I don't know if that guy that does the YouTube channel is the actual owner of Glassnode or one of the devs or whatever, but he knows what he's talking about, and he basically gives you both sides of the market, right? So, because he knows that data, on-chain data, though it is better than, say, just a moving average, it is still just an indicator. Just an indicator. That's all it is. It's an indicator. It's like everything else in the trading arena. You got some people that buy Bookmap that shows you where the big orders are, gives them an edge. Well, you know what? If you can statistically prove that you have an edge on it and you are making money, go for it. Keep doing it. If it ain't broke, don't fix it. But it's just an indicator, right? Just an indicator. It shows you where the bids were based off of the filled orders that happened. So, you know, there's a ton of things out there that people want you to spend money on that supposedly will give you an edge, but at the end of the day, it's still the same. Nothing can tell which direction the market's going to go. It's a statistical probabilities game. Time and probabilities. What are you doing to SPX? I'm not doing anything to it. The bearish target was hit, so now I'm not doing anything. Right? Unfortunately, there wasn't a big move to take on it, a big trade, because you were so close to it when this thing closed. See, I mean, yesterday it hit, and then you got a bullish reaction off from it. So you've already taken out yesterday's high, but you're just sideways. I expect probably a lot of these markets will just be sideways ranges today because of the big news event coming up tomorrow. But there's nothing to do. I'm expecting a pop because of the divergence only and the fact that was taken out. But like I said, anything up to 43.71 is going to be a selling opportunity in my opinion. So if it takes, 2 weeks to get up there, as long as that acts as resistance. Now, it might not happen on the first day, guys, because, people are going to be watching this level, and they will be probably looking to do the same thing, look for that to roll over. Now, Bitcoin has already tested its monthly supply, but the SPX has not. Because the end of the month, this massive monthly range, the last part of it was literally 7 days, 8 days. That's where your big range came from, was these last few days. So you haven't tested this yet. So a pop up to there, and then that's probably into the road for the SPX. But on the first day, if you're impatient and you try to take that on the first day, you're probably going to get stopped out on the next day. Because price action will find an area and just sit there and trade around it, then go up, stop everybody out 3-4 days later, and then roll over. It doesn't always happen, but it's a risk, right? So we'll see what happens if we get up there. I think that's the best place to look for a short on the SPX. I don't like anything else. It could roll over here or here because those are two daily resistances. So, I mean, it is what it is, right? But I can wait for it to get up there and see how it reacts. There's just nothing to do right now. And then Tesla probably looks exactly the same or close to that. We'll go check it out. Yeah, I mean, that was brutal. Just a brutal day. So this was your earnings call? Yeah, that's with the earnings. So opened well above, and that was a selling move. That traded right up into that. So look here at your last bullish candle. This was the rip your face off rally. This is when people said new all-time highs coming up on Tesla. Boom. 1-2 day test. Now, if you would have sold it on the first day, the second day would have stopped you out. That wick is higher, but that was the entry. The stop run, after the stop run, that was the entry. Right into supply. Boom. See ya. Straight down. Next level, supply. You come in hot on earnings. Really good earnings. Market, pre-market, blasts off to the upside. Opens here at 1075.38. First 5 minutes of the day, traded right up into daily supply. And then boom, shakalaka to the downside. So, it looks like it's a sell-off, right? Each pop and price is getting sold into. As long as that is occurring, you do not want to be a buyer. I am not adding any, I do buy and hold a lot of these. I am a long-term holder on Tesla. But right now I'm not buying anything. I'm not adding to my portfolio. We'll hear what the Fed has to say. We'll see how the market reacts after non-farm payrolls. Also, this week is the 2-week closure. Let's go back over here real quick. This week coming up is the 2-week closure. So Friday will be non-farm payrolls. So we'll have a pretty good idea as to what to look for in 5 days, right? It'd be nice to see this finally get that breakdown and close this candle. I'd love to see it close down around 36, 35 grand. But I would like to be able to add more to my short position first. So that's what I'm waiting for, is a bounce to add to that position. All right. So we'll see what happens. XDC. I'm not sure what XDC is, but I will take a look at it. I think, no, this is something different. Canadian dollars WCO index. So is this just an index fund that tracks the Canadian dollar? I mean, it's at the lows. That's a big range, a big area. A lot of support here. There's the support right there that as far as I can tell. You did get one close below that price, one daily close, but you can see that was bought right up. So, I mean, wait for the same thing to happen. 77.47, that's daily support, the lowest one. You opened right on it here. Let me stretch it out so you can see, opened right on it and then bounced. Next time you came into it, bounced. So is it going to break this time? We'll see. If you want to get long here, well, watch 77.64 because that was yesterday's close. You do not want to see a daily close below that. Right? You want to see 77.47 as the obvious spot that people are buying. So see what happens today. If you get a gap up today, look for a test of 77.64. That's where you would want to be take an entry potentially. If it gaps up, this thing might already be gapping lower. We don't know because I won't be able to see until whatever time. But yeah, it's at support. That's all I can say. These are typically the areas where you want to become a buyer if you think it's going to bounce. I'm not sure if it's tracking Canadian dollar or not. Nope, that's the wrong one. It is. There is the Canadian dollar futures, and it looks exactly the same. So it's tracking that. You're at support. It's inverse to USD CAD. Let's go look at USD CAD. Inverse. See? So, yeah. The last time it came up here, it smoked the liquidity. Right there. See that wick? Just slightly blast through the liquidity. That was all the liquidity setting above 1.29567. You tagged that and then you rolled over, and it was a fantastic short trade. Lasted for many days. Then we were sideways for a couple months. Then we broke down. Now we're back up. It's choppy, sideways, nasty, garbage price action. But you do have big ranges. If you think it's going to fail again here, or if you are a buyer on XDC, then that means you would be a seller here. Dollar is into resistance to DXY. It's possible. I think you're going to get another stab higher on the DXY to put in the bearish divergence first, because you don't have it yet. You do not have bearish div yet. All right, you're cooking to the upside. So be very careful about taking shorts right there, because this dollar strength is another reason why you're seeing that, right? Canadian weakness, dollar strength. So if you do put in another swing high up here and this doesn't, if you do finally get that bearish divergence, then and only then would I start to potentially look to be a buyer and that might translate all the way over to XDC. All right, so just be careful. It does look like the dollar is going to probably try to put in that divergence. Might try trade a little bit sideways for today. You'll probably get that run or that higher push tomorrow on at 2 o'clock or 2:30. Finally put in that divergence before rolling over. And who's to say it will roll over? I mean, you're at fresh many-year highs here, guys. Fresh many-year highs. There was the high January 2017 was the last time you were up in these regions. So, I'm not even on it. I was getting ready to say, I know it traded above that. Yep. Yeah, so I mean, many year highs. Look at that weekly just stretched out. And that thing was rocking and rolling. We were all over this dollar bullish. We were all over it. Everybody else was looking to get short dollar bullet or become bearish. Not us. We were all over it. We assumed the price action was going to be bullish because of rate hikes. We assumed it was going to get priced in. In fact, when we had this really big bearish day, because I was looking for support to buy it, I even tweeted it out. This looks so suspect to me. And I had a couple guys, say, why? And then they proceeded to hit me with the reason why they thought that it was doing exactly what it should be doing. And 2 days later, poof. So it was suspect. It very was. It very much was. Didn't like it at all. So we were all over dollar. We even got it here, right? Even got it here. So it's fantastic, but it's probably running out of steam. So that could translate to USD CAD. So this is what's difficult about it. USD CAD is it's not overbought. It's reaching those levels. It does look like it wants to go higher. Very small range day today. I already looked at it and everything. I just didn't put it on watch because it's at resistance. I like it higher. It's just at resistance. So the only way you could trade that is to look for daily support, and there isn't any. Right? There is no daily support to look to be a buyer at. You're just hanging out. You could go intraday and just find an intraday support way out in the middle of nowhere. But yeah, there's no setup on it intraday, which is why I just didn't bring it up. Hopefully the DXY, I just talked about it there for you, my friend. I did miss you, but wanted to go back and get it for you. Good evening from Aussie land. Good morning. Good evening. BTC decision week, hopefully. What do you think of DXY rally? I think it's on fire. I think we were all over it. We were looking for it to happen. I've been speaking about it for months and months, and it happened. Right? I bought this. I didn't trade this. I got short Euro USD. We were looking for this. Been crushing it to the downside, the Euro USD, which means bullish dollar. That's the only way I can trade the DXY, is to trade the Euro. The Euro has 60% weighted, or the DXY has 60% weighted with the Euro, so they trade inversely. But it was fantastic. Nice. It's strong, right? Like I said, on the RSI, you're still stretching out. You're not even, you're oversold, overbought, but like this thing it can go for another 2 weeks. Look how high this got, right? Well, here, let's do it like this. Look how high this got, and on this move right here, these are weeklies, right? So boom, that's this candle. That's where you peaked out on the RSI. Then you had 2 weeks of down. So everybody was probably thinking that was the end of the dollar and it was rolling over and it was sayonara. But it just tested old resistance and bounced. Boom. So you had this nice pullback right back in the overbought regions, and then see ya. Now there's a reason why that was so strong through that period, but I'm just showing you. You know what I mean? Just because you're overbought over here, you could see a weak pullback down to 101.907, and then you could see another expansion the same size as that up into 120. Now, I'm not calling that, right? I think what's going to be priced in because of the rate hikes is priced in. So we'll see what happens from here. Because everybody knows the Fed is expecting 6 hikes this year. And that's getting priced in, right? So right now there's nothing to do on it. Wait for support, and when I say support, I mean like a good support, like a weekly support. You're not gonna find any here, so you gotta wait for one to form. Or like I said, you can watch this area here. That will be the first area to watch to see if it gets support. This day over here, this was a fantastic trade as well. This was the area of which I got long on the euro. Right into support. I mean, do you get any cleaner than that? No, you do not. There's nobody on the face of the planet Earth that has technical analysis that clean, that smooth. Boom. That's to the dollar almost, guys. 99,832 is your support. The candle's low is 99,818. So, 2 cents. Boom. Yeah, not bad. Not bad at all. Pound yen, another one that you could look for a potential short. You're into daily res. I don't know if I talked about this one or not. I think I went straight to Aussie yen. There's daily res. So, yeah, I mean, there's no signal now. No setup now. That's the problem about this early in the morning. Is, that was done during London. So high of day is probably in on pound yen. So watch for a resistance. Unfortunately, here's your last area of resistance. I like it lower simply because you've taken out support to the downside. This push higher was a trap. Got right above resistance there, but you've already taken out the low. So if it pushes back up to 163.220, I'd probably be looking to take a short entry there. Target low of day, 1700 hours is your daily open. There is support there as well. So same scenario. You're getting real close to support on that. So the trade was up here on this one, unfortunately. That's probably going to be the case on the other asset too. Let's go look at it real quick. We got until 9 o'clock. 9 o'clock is pretty much where that's the end. After we get to 9, if I haven't taken a trade or found a setup yet, I probably ain't going to. No, this thing's looking like we'll probably get a short out of this. Maybe. 92,604 would be the best one because that's resistance. Because a close above would let you know that you're wrong, probably. Good morning, Danny B. Thank you for being here, my friend. Good morning, Ed. Good morning, Wes. What are you doing? Oh, yeah, I read that. I'm not doing anything to it. We checked out XDC. Good evening from Aussie. What do you think about that? How do you determine targets? Old swing highs and swing lows on the daily. So if I'm taking a day trade, my intraday target is going to be either daily high or daily low. All right. So like I said here, I'll just use this for an example. All right. So I'm looking to take a short here because of this impulse move to the downside. I'm looking at this as a pullback only. I'm looking for daily resistance to hold. So over here on the daily, you can see that this is low of day right here. So if I were to take a short, my target would be low of day. Now, on this asset, it's a little bit worse on pound yen, but there's daily support. So if daily support comes in before the daily low, then that's where I would take profits, because you don't know if you're going to get lower than support. We don't know if price is even going to get down there, right? I've taken many shorts to where it just goes a little bit and just peters out because it's going to be an inside range bound day. And you just don't get an expansion or an expansion big enough to matter, right? But that's how I do it. And if I'm looking to go long, I'm looking to get long at support, and I'm aiming at the high of day. Those are for my intraday targets. For my swing trade targets, I'm doing the exact same thing, but I'm looking longer term. So if I'm longer term bearish on Aussie yen, my longer term bearish target is 90.45 because of it's the lowest swing low. That's where the liquidity is. So if the market's going to roll over because it's in search of demand, because there's too much supply up here, then it rolls over and it attacks the liquidity that is under this massive swing low. Why is there liquidity under that massive swing low? Well, because swing traders and position traders trail their stops. So if a position trader bought down here, right, each time you get a nice big expansion to the upside, they will trail those stops up under the swings. Each swing low becomes a liquidity pool. And anybody that got long here on this day, their stop is trailed right there more than likely still, because you didn't get an expansion away from the entry. So the swing lows and swing highs are what I target. Okay? That's how I gauge targets. But day trades, it's either the day I'm taking the entry, I'm looking for that day's low or that day's high. Crypto, XDCUSD, crypto. Got you. All right, XDCUSD, crypto, he says. It's only on Finex, a couple other exchanges. I guess Finex it is. All right, so these are daily candles, and it looks disgusting. Not a lot of liquidity in this asset. So let's see where it is overall. Let's go to the weekly. Let's see where we are. All right, so been trending to the downside. Couple weeks of a bullish pop, more of a trend to the downside. So the trend is lower. Yes, you have a nice big candle here, but you closed at resistance. So if you do get you just barely closed above resistance. But to be fair, this thing doesn't have much liquidity in it. So you see how this candle closed here and this candle opened lower than this. And this is a 24/7 market. Okay? This is a 24/7 market, meaning there is never any closure. So in 1 second, 1 split second, on a Sunday night at 8 p.m. Eastern Standard Time, when this thing closed and this thing opened, it gapped down. This is a weekly time frame. Look at this. You closed here, and 1 second later, you opened all the way down there. That's because there's nobody on the bid or ask here. It traded up there, and 1 split second, it immediately went to here. That's terrible liquidity. It's just, be careful. These are the assets that you can get massive spikes on when there's no liquidity like that. But it's into resistance. To be fair, you did close last week above it, but as we just seen how this thing gaps around on the weeklies, it could have just been a gap. But as of right now, your near-term trend is up. So I guess if you're looking for, because typically people are looking to buy these assets or already own it, and they just want to see if it's going to go higher. And it can. You did take out that weekly swing high right there. So to be honest with you, man, this thing might roll over. It might be done. Just watch it on the daily, I guess. Because remember, swing highs and swing lows, those are the liquidity pools. This thing traded right there, and that's where it found resistance. So now you need a daily close. Oh, these daily candles are disgusting. Now you need a daily close above there, 0.064, in order for you to be able to say, yeah, it's probably going higher. If it keeps rejecting there, then it's probably going lower. It's probably going to go lower. It'll do what Bitcoin does, probably. Most of them do. And I mean, that's probably what, 50% off even. No, a lot more. 76% off. Disgusting. 76% off. I don't know what it is. I don't know if it's the next big crypto. It could be. Could you get another massive spike like that? Probably not, because remember, this big bull market on all cryptos was due to the Fed, not because of the cryptos themselves. They need to understand that, and people just don't. They think that this thing was exploding to the upside because it's such an awesome crypto and it's going to change the world. That's not the case. The reason you got this massive bullish explosion on all cryptos was because of the Fed. This is when it started. Right here. This is when it started. That's when they implemented bullish policies. Boom. It wasn't just cryptos. It was all risk assets. All of them. Got a massive explosion. It's a bubble. The Fed is controlling the markets. That's why I was telling people to look for Bitcoin to roll over in October of 2021, because the Fed was starting to put rumors out to the rumor mill about, interest rate hikes, quantitative tightening. Once they start talking about it, once you start hearing rumors, then it's time to start taking profits, because the Fed is the one that puts the rumors out there. They do it slowly over time. This gives investors time to fix their portfolios, do some adjustments, if you will. Now you're 70% off. If I take this thing off log, that's what it really looks like. Disgusting. Be very, very careful. Can it bounce because it got to 77% off the highs? Yeah, that's what you're seeing now. But I expect the bounce to be sold into. I wouldn't be surprised one bit if most of these cryptos go back to where they came from. I wouldn't be surprised one bit. So just be careful. Please be careful. Where was I at? Do you trade, Heath? Do you trade better without pants? Of course. Of course. I have data, statistic. It's a statistical edge. You have a higher probable chance of being a profitable trader if you trade without pants. 100%. 100%. I still don't have a camera on this computer setup yet, so I don't have to worry about people glaring in on me. If you have a laptop, I wouldn't suggest it, or put tape over the camera if you're going to trade without pants. Please. But yes, 100% Wes. I trade much better without pants. Are you looking to close your short 36K? I'm not sure why you want the 2-week close there. Well, the 2-week close would give us, it'd give us closure, right? It would give us range resolve. I want this range to resolve. Either to the upside, I want fresh 2022 highs, or I want fresh 2022 lows. I want out of this range. I'm sick of it. I'm sick of looking at it. I'm sick of trading it. You know what I mean? I'm done with it. It's much better when assets are trending in one direction or the other, because then you could just set in your position, right? So when we got long here, it would have been much better not to take profits there. It would have been much better for Bitcoin to go on up and make new all-time highs, especially because I was levered up on that position. That position would have quadrupled, 5x, 10x just to make it back to previous all-time highs. So trending environments are much easier to make money in than these kind of environments when you can't really get a bead on what's going on, right? When assets are chopping back and forth, especially through here. This was some of the roughest trading right in here, simply because you were above the 21, then you were back under it, then you were above it, then you were back under it. So there's no real directional, it's just difficult. And if we're not going to break down, right, since we've been here for a long time. Look at the momentum we had to the downside here. And we were looking for that. I was looking for a rejection at the yearly open. I took profits there, then we got short here, and then we rode this thing down. Now I got short again down here, so I destroyed my cost basis, and then actually got stopped out here. But I re-entered the short position here. But it was, if you remember, I didn't like the trade, so I only took it on a very small position. Oh wait, you don't remember. Sorry. You just got there yesterday. Apologies. And so I'm in the short, but it's such a small position. And I'm not getting anything. So when you get these lows, but they're insignificant, then price bounces back up, and then my P&L looks exactly the same as it did on this bullish day, right? My P&L was at a specific point here. Well, it's been fluctuating around that point for days. 1, 2, 3, 4, 5, 6, 7, 8 days. I'm looking at the same P&L. Well, the longer I sit in this position, especially to the short side, I'm going to pay fees. That profit's going to get chipped away at by your funding rates, by your exchange fees, by this, by that. So when something is chopping around like this, there's an opportunity cost to just setting in it. First, you're losing P&L from the fees. Second, you could deploy that capital elsewhere to an asset that is moving, for instance, right? Because this one isn't. This one has not been really moving anywhere. This was a nice expansion, and we got that within a period of a week, 2 weeks, 1, 2, 3, 4, 5, 6 days. Just boom. And then for 50 days, we've went nowhere. I'm just sick of it. I just want to see this range get resolved one way or the other. I do not care. I am not a Bitcoin maximalist. I will short it to 0 if it wants to go there. If it wants to go to 1 million, I will ride it all the way up to 1 million. I do believe higher is where Bitcoin's going. I think the fundamentals are good overall, long term on Bitcoin, like 20 years out. I think 20 years from now, Bitcoin will be so damn expensive it won't even be funny. Because I do believe in its purpose. And you can look at a long-term chart and you can see that playing out. Bitcoin is only bullish. I mean, you do get a period of a year or two where you've had bear markets. May change this time because we got different monetary policy, right? So we'll see what happens. But overall, long term, I want to be long this asset. I want to own as much of it as I can, which is why I trade it on the inverse swap contract. Because what's the point in I can get paid in dollars and then just turn right around and buy Bitcoin. I would just rather trade the inverse swap contract so I can just be paid in Bitcoin. It's just one transaction. Take a short trade because price is going lower. Make, 20%, 30% in some scenarios. Hell, I've even made as high as 60% on a trade. That's 60% of the total account's equity in Bitcoin. Yeah, pay me in Bitcoin. Thank you. I'll take it. It's just easier. So right now, longer term, like when I say longer term, I'm talking 2 months. I think Bitcoin's going to be much lower. I think you're going to be looking at Bitcoin down in the $20,000 area. Not 20, but anywhere under 30K. I think you're gonna close that CME gap if you start trading that way. I do not see why the gap wouldn't get filled. And then that's where I'm gonna start looking to be a buyer again, unless the world is ending. Obviously, if the world is coming to an end, then maybe I'll wait to buy it lower. Facebook and Nvidia. Let's go look at it real quick, and then I'm gonna have to sign off because it's a little bit after 6:30, and I don't like doing these things too long. Facebook, Facebook's getting a pop. I like Facebook higher, specifically for this gap to fill. Right? I mean, that is a big one, big one. So, all tech's getting crushed right now. They had earnings. Their earnings were good, obviously, because since you've had earnings, you haven't been sold into yet. I don't know if this gap gets filled in the next week or two. It could be the next year or two before this gap gets filled. But I do think that it will eventually get filled. Facebook is a good company. It makes money. Right? That's the thing. How much money do they make? How much debt do they hold? If they make more money than they own debt, then their price will go up once the market turns back into a bull utopia. And it will, right? They only always go up. You get these periods where you get, a little bit of down, but eventually it goes back up. This was probably one of the biggest declines Facebook has ever seen. So, I mean, yeah, I think it'll go higher. I think you could have picked it up for almost 50% off, a little over 50% off down at those if you want to hold Facebook long term. If the market's going to see more downside because of the rate hikes, then I think you could probably wait and buy it cheaper. First things first, you got a resistance level staring you right in the face. So you got to get above that first. All right, resistance is here at 217.31. Next resistance will be there at 233.89. You get a daily closure above that, then I'm targeting gap fillage. If you get a daily closure above 233.89, I'd be looking for the gap to fill. There's another one there, but that's such an obvious target. I mean, I'd say I'd probably be looking for that to happen, but you got to get above these two first. As of right now, they can be sold into here or here. Just depends, right? And then what was the other one? Facebook and NVIDIA. I love NVIDIA. I love their products. Love everything about them. I think they're going to be much more expensive later on down the road. Their graphics cards keep getting better, and better, more awesome each year. So, I mean, technology is growing at an exponential rate, which is why technology companies are good to have on your portfolio. So, but wait, we need to wait for bullish conditions again. We need to wait for when you start hearing most of your investors on TD Ameritrade Network talking about how they're loading the boat up with longs, then, maybe it's time to start looking to start buying some of these again. But you were 47% off NVIDIA, almost half off. It is a good buy for this company, I think. But are we going to see more sideways to down for an extended period? Yes, probably. So if you want to know how to tell if we're in a decline or not, or a recession is 2 back-to-back red quarters. Okay? 2 back-to-back red quarters. That's what gauges if you're in a recession or not. You got 1 month and 28 days. So this because this quarter just got started in April. All right. But come June, if this thing closes red, you have a recession on your hands. Right? 2 back-to-back consecutive quarter closes. Recession on your hands. So, and then if we do have a recession on our hands, there is possible more downside. Right? At least for another quarter or so. And the Fed is likely going to let this happen. They are likely going to let this recession happen because they have to fix inflation. They have to. Inflation is the number one worst case scenario for them. If they cannot get control of inflation, they lose their power. Then they have to figure out a way. I mean, the dollar. They can't lose that. They cannot lose reserve status. If you lose reserve status, you're nothing. That's the only thing. That's why they're going to do everything in their power, more than likely, to stop inflation. I'm not a macro guy, so I could be wrong about that, but I do believe you can't make an omelet without breaking some eggs, right? And if we need to make a new omelet because of the bubble they built, well, some of these eggs are going to get broken, and that's a fact. And we'll be right here to make money off of it. You guys have a fantastic day. If you have any questions or if you're catching the replay, just drop the questions down in the comment section. As I always answer them. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.